Praveen, sir, you may start.
Good afternoon, everyone. My name is CA Praveen Kumar Mundra from Bundi city in Rajasthan, and I will be your moderator for today's webinar on topic various types of so-called notices, key issues, and response strategies and capacity building initiative of CMP. Welcome to our virtual event conducted by Committee for Members in Practice of ICAI. We have an exciting lineup of speakers today. Advocate Ranjan Ji Mehta. Mr. Ranjan Mehta is an advocate of Rajasthan High Court, Jaipur, and a member of. Hello, I'm audible.
Yes, sir, you're audible. You may continue.
Mr. Ranjan Mehta is an advocate of Rajasthan High Court, Jaipur, and a fellow member of Institute of Chartered Accountants of India. Mr. Ranjan Mehta and his firm RMA Legal specializes in GST litigation, advisory, and also provides GST consultancy to various trade bodies and corporates. Advocate Ranjan Mehta has presented more than 250 papers on GST, service tax, and VAT at various branches of ICAI. He is also a faculty of GST under Indirect Taxes Committee of ICAI. He has a flair for writing, and his articles have been published at various journals and websites. In today's webinar, he will share valuable insight on various types of show causes, notices, key issues, and response strategies and capacity building initiative of CMP. Before we begin our request, I request to all the participants that please ensure your audio is muted. Please use the chat box for any query or questions. Without further ado, let's get started. Our esteemed speaker is Advocate Ranjanji Mehta. Please join me in welcoming Advocate Ranjan Mehta. I now hand over the session to the learned speaker, Mr. Ranjanji Mehta. Thank you.
Thank you, Praveenji.
Yes, sir.
I also thank Committee for Members in Practice for giving me this opportunity to speak on this particular topic of various show cause notices that have been received and how to respond to those show cause notices. Let me share the screen. Recently, a number of show cause notices have been issued by various authorities, including CGST, SGST, DGJ, and other anti-evasion authorities. A number of show cause notices have been issued, particularly with respect to Section 74 for the financial year 2017-18. The last date was 5th of August 2024. So a number of such show cause notices have been received by, and I'm sure that every member must have received such show cause notices. And apart from that, financial year 17, 18, 18, 19, 19, 20 related Section 73 show cause notices were also issued and adjudicated. So appeals are also required to be filed in all such cases where such show cause notices have been adjudicated. So starting from the very first, we'll focus today on various issues that are there in those show cause notices and how, as a professional, one should respond to those show cause notices that we are going to see. So first of all, first thing first, in every show cause notice, whenever one receives a show cause notices, he must see that whether those show cause notices are within the timeline. As per Section 73, the timeline was for a period of 3 years for adjudication minus 3 months. That means 33 months were available from the due date of the annual return for issuing the show cause notices under Section 73. And for the purpose Section 74, the period is for 5 years of adjudication from the due date of annual return and minus 6 months, that is for issuing the show cause notices under Section 74. So as far as Section 73 is concerned, there has been a number of extensions by the department. It was by notification 9/2023, thereafter notification 56/2023. these timelines were extended. And these timelines were extended in a number of such years, 17, 18, 18, 19, 19, 20. For all the 3 years, the timelines were extended. Now, this particular point was taken up by various high courts, and various issues were placed before those high courts, stating that since these particular extensions under notification 9 by 2023, there are later in 56 by 2023, were by virtue of section 168 capital A, which is a force majeure provision under the GST law, which was specifically brought in after the COVID came into effect by the Taxation and Other Laws Amendment Act. These particular this particular provision says that whenever there is any kind of force measure, such as a pandemic is existing, then in all those cases, the government has the right to extend particular due dates. So based on that, the due dates of filing appeals, due dates of claiming the refunds, due dates of filing returns, everything was extended for a particular period of time. And apart from that, there was also a Supreme Court judgment which particularly stated that period comprising 15th of March 2020 to February 22 should be excluded in calculating all the due dates for which any application or appeal or any other memorandum was to be filed. So based on that, the government thought that in particularly we can also extend the due dates even after the period of 3 years, which was there, 3 years minus 3 months, 33 months, which was there under section 73 for issuance of the show cause notice. So they sought to extend such due dates. However, section 168 capital A specifically required that such extension should be in a force majeure condition and upon a recommendation of the GST Council. So these were pending at various high courts. Allahabad High Court, Madras High Court, and Guwahati High Court. 3 high courts have passed their respective judgments. Rajasthan High Court has given certain stays in various cases, and in various cases stays were not granted. And now the matter is pending for the final hearing on this issue. So ultimately, Allahabad High Court and Madras High Court decided against the SSC. That means in the favor of the department, stating that such extension was necessary, and since the COVID conditions were existing, and due to that, the number of officers who were attending the offices were low. So therefore, this extension was required, and they uphold those particular notifications. However, Guwahati High Court in case of Barkatagi Print and Media Services specifically held that since for those particular notifications, the government is lacking a recommendation of the GST Council, and since this recommendation is not there, therefore section 168A was not invoked for the purposes of notification number 56 by 2023, and therefore they quashed these particular notifications. So in all the cases where in the extended period 17, 18, 18, 19 and 19, 20 related show cause notices were issued, it is a very good point for everybody to take and state that since these particular notifications are without the recommendations of the GST Council, therefore, in the such extended period, show cause notice which has been issued is barred by limitation. So this is something which one should look into in every show cause notices. First, one should see that whether that particular show cause notice is barred by limitation or not. If it is issued within the prescribed time, if it is issued within the specific timeline which is allowed under section 73 or 74, or such extended time limit which has been given by virtue of a notification. First thing first. Apart from that, and there are other show cause notices which are also issued. These are certain show cause notices which are issued in case of such cases where under section 67 subsection 2 a particular search happens and thereafter a seizure happens of the goods. In that case, section 67(6) says that assessing authorities have to issue show cause notices within a period of 6 months from the date when the such search or seizure happened. So the show cause notices have to be issued within that particular period of 6 months. So one should also take a very closer look that whether those show cause notices were served on the SSC within that particular period of 6 months, because we have came across various such cases where though the show cause notices which have been issued are dated in that particular 6 months period, however, they are not served properly. Whereas section 73, 74, 130 read with Rule 142, which is particular provision for the purpose of issuing the show cause notices under the CGST rules, that particular provision says the notice has to be served. So service is receipt of show cause notice, that the notice has been received by the intended individual, not anybody else, but the show cause notice must have been received by that particular individual to whom the show cause notice is intended to be received. So if a show cause notice has not been served within a period of that 6 months, then in that case, it is a very good case for anybody to argue that such notice which is served beyond a period of 6 months is barred by limitation, and therefore the same should be quashed and set aside. So this is again something for every show cause notice. One should definitely look at, everybody should strategize accordingly, that first one should check that whether the show cause notice has been issued within the timeline, within the time period, issued and served, because Rule 142 requires specifically that the show cause notice must be served upon the assessee within the time frame. So first things first, timelines. Then in number of cases, it happens that a particular inquiry or proceedings are pending with a particular authority, let us say state authorities, and thereafter on the similar issue based on whatever the intelligences that have been received or some report that has been given by the DGRM cell of the CBIC, and based on that another show cause notice or another inquiry proceedings are initiated by the CGST authorities, and based on that the show cause notices are issued. So these type of parallel proceedings are very much common, and there are a number of such cases in which such inquiry and proceedings are challenged. So now one need to see what can be challenged, what is the ground for the challenge against such kind of proceedings, and how one should proceed. So there are two things. One is a proceeding and another is an inquiry. Inquiries are done under Section 70 of the CGST or SGST Act, which is particularly giving the summons and asking a person to appear in person or provide certain documents. However, proceedings are the assessment proceedings or show cause notice proceedings or any other such audit proceedings which are there. There is a Section 62B of the CGST and SGST Act where it has been categorically stated that when in the same subject matter, a proceeding has been initiated by a particular authority, let us say SGST authority, then the CGST authorities do not have any right to initiate another proceedings in the matter. This particular thing has been barred specifically in the GST law to check the parallel proceedings, which would have been commonly been done by these authorities over a period of time. Now, this particular provision was tested in number of cases by various courts, and Allahabad High Court as well as Rajasthan High Court both have decided this issue mostly in department's favor where the summons were challenged. So what happens is there is a particular authority who has initiated particular proceedings or a particular inquiry. Section 70 summons have been issued. Thereafter, a DRC 01 has been issued. And it appears that on the same subject matter, another summon has been issued by another authority, let us say CGST authority. Now, when the assessees challenged these provisions, it was understood by the courts that summon is an inquiry proceeding. And what has been barred in Section 62B is a proceeding which is in the nature of assessment or audit or something else, but not merely an inquiry. So the courts have decided specifically that whenever there is only a summon issued, there the department has apprehended certain thing, and on the basis of such apprehensions, the department wants further proceedings in the matter. So any inquiry proceedings cannot be barred under Section 62B. This has been held by Rajasthan as well as Allahabad High Court, that on the stage of summon, nobody can go to the courts and ask that such proceedings are barred under Section 62B. One should wait and let it to convert to a proceeding. Once it is converted into proceeding, then only one can say that yes, on the same subject matter, there is already a proceeding, an assessment proceeding and show cause notice proceeding, which are already there. And based on that, another authority cannot issue or cannot take up a parallel proceeding. This is how it has been interpreted. So one need to be very sure a check has to be specifically done by the professional who is looking into the show cause notices that whether such assessee has received another show cause notice already on the same subject matter. If yes, then definitely while replying to that particular show cause notice, one should take this ground of section 6(2)(b) and clearly state that since in these proceedings already particular proceedings have happened or are undergoing, therefore in such case no further proceedings can be initiated. So these proceedings should be dropped instantaneously. So this is the ground one should take, but at the stage of summons, one should not take this ground or one should not approach to the court because the courts have clearly stated that summons are merely an inquiry. So therefore, they are not culminating into the proceedings. This was particularly stated. Then there was another case where it was stated that whether all the proceedings which involve various states or which requires other states consideration, whether such proceedings should be transferred to DGGI because they are having the pan-India jurisdiction. So on this, the court has specifically stated that if they want to transfer, they can transfer, but one cannot compel them to transfer the case to the DGGI. So again, for the particular jurisdiction of a state authorities or a CGST authority having the jurisdiction by virtue of those particular circulars and notifications for which the jurisdiction have been designed, they can definitely, one can definitely ask and say that based on this thing, jurisdiction cannot be questioned. Yes, it is there. However, again, I'm saying that once a state authority goes beyond its purview, asks for details for the other state or asks for the details of some other registration to which it does not have jurisdiction, one should definitely take up the case of jurisdiction, stating that this is beyond your jurisdiction. So therefore, this show cause notice is bad in law and therefore should be set aside. Now, this particular case, though we are having so much of such cases where the state authorities, also DGGI, also CGST authorities are conducting searches and seizing the cash which is available at the business premises or the residence of an assessee. Now, in all such cases where they are seizing such cash, the cash which is seized is kept with them, and thereafter CGS authorities particularly keep an FD of that amount. However, the assessee is dispossessed from that cash, and that is not released. That is not released immediately, and it creates a lot of stress upon the assessee. So the matter went to the courts. And earlier in a decision, the courts stated that the high courts, some of the high courts, it was one Madhya Pradesh High Court, which stated that cash are things, therefore they can be seized. However, in case of Arvind Goyal, Delhi GSC, it was particularly stated that cash cannot be seized because it is neither thing, neither goods, nothing else. Therefore, cash cannot be seized. So in all such cases, and this particular decision of the Delhi High Court has been endorsed by the Supreme Court also, SLP has been rejected. Therefore, in all such cases where the cash is seized, assessee can definitely approach to the court stating that since my cash was seized, it was not under the power of the authorities to seize the cash. Therefore, this particular amount should again be reimbursed to me or given back to me. And such kind of seizure of cash is incorrect, illegal. So again, this is something which would be there in all the show cause notices where searches have happened and the cash have been seized. So one should take this ground while replying to the show cause notice as well, stating that the seizure of cash in itself was incorrect and illegal, and therefore it should be quashed. Now, payments which are made during search. Gujarat High Court came down very heavily in case of Bhumi Associates on such pressure tactics which are done by the department. Gujarat High Court even passed a categoric judgment against the officers, clearly specifying certain guidelines, in which the Gujarat High Court clearly stated that no such activity could be done on the very same day when the search has happened. Department officers who are getting DRC 03 filed on the very same day are incorrect. And in such cases, the payment cannot be said to be a voluntary payment because DRC 03 heading itself says the voluntary payment of tax. So the court clearly stated that pressurizing an assessee and getting that DRC 03 filled is incorrect, and such officers should refrain from pressurizing an assessee for depositing certain amount on the very same day. They should ask the assessee that yes, it was your demand. Now, if you want to voluntarily deposit the tax, you may kindly deposit the tax. We are giving you this particular option. However, one cannot pressurize the assessee on this very ground. Wherever such particular amounts have been received, the department was directed to refund such amount along with interest. So again, whenever it should be the strategy of a professional that whenever such amounts are being deposited by virtue of DRC 03, the assessee should go on to the courts, or they should go to the department clearly stating that this amount was being deposited under stress, under duress. My statements were taken under duress, and therefore this amount was illegally taken from me or was deposited by me under stress in DRC 03. Therefore, such amount should be refunded back. And the courts are definitely going to help you. Courts are taking a negative view against the department in all such cases. Now, DRC 01 or DRC 01A, whether they are mandatory. Now, this particular thing was discussed in New Morning Stars versus the Deputy Commissioner. This is a case. There are two types of cases which we can see. One is from SGST authorities and one is from CGST authorities. In case of SGST authorities, what is happening that they are directly issuing DRC 07 and only a one-liner remark is given, or DRC 01, only a one-liner remark is given that so and so thing is incorrect. The DRC GSTR 3B versus 2A, there is a difference. That e-way bill was not properly filed. One-liner thing is given under the DRC 01, which is issued from the portal itself. And on the other side, CGST authorities are passing full-fledged orders without issuing DRC 01. So there are two types of things which are happening, or both are incorrect. The courts, in various cases, apart from this New Morning Star Travels, the courts have clearly stated that a show cause notice must be having proper details. It must categorically disclose what are the shortcomings of the assessee, what are the discrepancies that have been found in either the verification, either scrutiny, or either pre-show cause notice consultation or anything else. What are the different discrepancies which have been identified? And once they have identified these type of discrepancies, then those discrepancies should be categorically given to the taxpayer in form DRC 01A. And let me remind you very categorically that whenever we ask departmental authorities that DRC 01A was not given, it was mandatory, they say no, this particular word which was shall in the particular provision 142 1 capital A, this shall has been replaced by the word may. Therefore, we may and may not issue DRC 01A, it is up to us. However, against this, everybody has a particular ground. Now, what that ground is? Firstly, that for the period of 1st of July 2017 to 31st of March 2021, DRC 01A came with the word shall. So it was mandatory for that period at least. So once it was mandatory for that period, if that DRC 01A is not issued and directly DRC 01 is issued, this is a very particular ground which can be taken. Now there is another ground which is still there for the purpose of reading that may as shall in that particular provision of 142 1 capital A, is that as per section 74(9), every assessee has the right to pay the tax along with interest and penalty of 15% before issuance of a show cause notice. Now, if I am not given that particular option, because that is a mandatory option given by section 74(9) to the assessee. Now, once I am not given that option, I was not allowed by the department to take that option because I was not knowing what is the amount that the department is contemplating to issue in the show cause notice. So once department has the option to give me that amount by virtue of a DRC 01A, that is a pre-show cause notice. Once the department has the option, they have not given me that option. By not giving me that option, they are directly taking me to deposit a penalty of 25% as per section 74(9). Or in case of section 73, without issuance of the show cause notice, I can deposit my tax and interest without paying any penalty. Because as soon as the show cause notice is issued, the amount goes on further to 10%. So since that particular option was not given to me, therefore the proceedings are illegal, they are bad in law, and therefore should be set aside. This is a ground which one could definitely take. So in every case where DRC 01A is not issued, even today, and Section 74 is invoked, 74.9's timeline, 74.9 benefit was not given to me because I was not given the calculation of the amount which is contemplated by the department to be deposited. Therefore, one should definitely one was definitely precluded from taking that particular option of depositing 15% of the tax. So again, this is a right which is available to the assessee. Since that right is not given, therefore, based on that non-issuance of DRC 01A, everybody should contest the matter. Now coming to DRC 01. In all the cases of the state authorities where one-liner reasons were given, without giving any reason as to why the penalty is to be levied, why the interest is to be levied, why the tax is to be levied, not explaining properly. There are a number of such cases in which the Supreme Court as well as the High Courts have given this particular thing, that when you are not elaborative enough, you have not given particular reasons for which the particular liability has been imposed upon the assessee, then in such cases, your show cause notices and your orders are non-speaking, and therefore they should be set aside. So one should take this ground always that the show cause notice and order is non-speaking one. And even in all those cases where elaborative DRC 01A are issued, in various cases we have found that the state authorities clearly give one-liner, two-liner in a elaborative DRC 01. Whatever that is above and below of those two liners are copy paste job. So therefore, in all such cases where only brief discrepancies or brief reasons for issuing the show cause notices are given, one should take this particular ground stating that since they were not elaborative enough, they were not giving us the proper reason for which the show cause notice is issued or the demand is imposed. Therefore, such show cause notice is incorrect. It is non-speaking, and therefore rights of natural justice are violated, and on this ground the show cause notice should be set aside. Now coming to the case of CGST authorities where they issue show cause notice without any DRC 01 on DRC 01 on the portal, or thereafter issue order without any DRC 07 on the portal. Then in all such cases, one should take the ground of Rule 142(1) capital A. 142(1) capital A clearly requires that apart from the show cause notice, a summary informed DRC 01 has to be issued, and DRC 01 format has been given in the rules. So whenever there is an elaborative show cause notice, yes, but a summary thereof is not given, then it is sine qua non for the purpose of this Rule 142(1) capital A, and based on this itself, the show cause notice should be quashed, should be held to be illegal. So in all such cases of the CGST authorities, one should definitely take this ground of 142(1) capital A, that a summary in DRC 01 has to be issued, and that must be in the format which has been given in the rules. And in the case of SGST authorities, definitely one should take this particular ground that it was not elaborative enough, therefore non-speaking, and on the ground of it being non-speaking, it should be set aside because it definitely takes away my right of natural justice, because since I don't know what are the reasons for which this discrepancy was upheld, this discrepancy was said to be violating certain provisions of laws. Till the time I don't know, how could I defend myself? So in all such cases, in all such scenarios, show cause notices should be challenged on these particular grounds itself. So this was held in NCAS Services Private Limited, Jharkhand High Court, that both DRC 01A and DRC 01 are mandatory, and they must be issued. Detailed allegations must be given. Summary notice are not a substitute of proper notices. So these are two judgments which one should definitely refer in every their substantiations to the show cause notices. Now, personal hearing. This is something which is a very high pain point in case of state authorities. Because what used to happen in earlier VAT regime, they used to record all the personal hearings in their note sheets and their files in very few states the online proceedings used to happen. In all the cases, note sheets, etc., were maintained. So now what happens that they don't bother for the assessee for them to issue personal hearing notices. They simply say, okay, we have given the show cause notices. Now, since they have not replied, we have passed an ex parte order. So in recent days, the portal is giving, department has started giving us these personal hearing notices by portal itself. However, in earlier periods, I'm talking about 1 year before right now. So in all the earlier periods, such show cause notices were not issued, such personal hearing notices were not issued. However, there is section 75. Section 75(4) clearly states that wherever there is an adverse order is contemplated against the assessee, then in all such cases, giving personal hearing is a mandatory thing. As per section 75(4), personal hearing is a mandatory requirement of the law. So, when in all the cases, if the department is contemplating to issue an order, in 99.9% cases, it has to be an adverse order against the assessee. Otherwise, department would not bother to issue a show cause. Now, when they are going to be as such, then the personal hearing, giving personal hearing is mandatory. Now, personal hearing is also there with 3 adjournments. That means that I can ask 3 times that another hearing should be scheduled. Now, what is happening right now is SGST authorities are definitely not bothering in these cases. In various cases, we have found out that ex parte orders are passed when the assessee is not approached. But in CGST authority, they are saying that 3 hearings will be given. So in case of 3 hearings, there will be only 2 adjournments. So you can always go on and ask that, yes, I have taken 2 adjournments. Yes, there are 3 hearings. Now I can ask another adjournment with a 4 for you to give me the 4th hearing. So this can definitely happen. So whenever they ask you for a personal hearing on a particular date, you can say, okay, give me the next date. Then on the second date, you can ask me to give me the next date. Then on the third date also, you can say that give me the next date. But on the 4th, it is mandatory for you to appear. Otherwise, they can definitely contemplate to ask for an ex parte order. So for all the CGST authorities, yes, they are issuing the personal hearing notices, but those personal hearing notices are many times not being served on the assessee, or are not being served on the portal, or are given on some address which is not properly served, or the personal hearing notices are returned back. So one should definitely take this particular ground, specifically stating that since this personal hearing notice has not reached to me, therefore give me the another opportunity to appear before you. So it is always obligatory and mandatory on the part of the department to provide an opportunity of personal hearing. I can submit my written submissions. Definitely, that is my right. I can always submit, but having a personal hearing, opportunity of being heard is mandatory. It is the utmost right under the theory of natural justice, which has been given to an assessee. The principle of natural justice are definitely required to be upheld. A number of cases have been upheld or rendered by the Supreme Court, where they have stated that since natural justice has not been followed, therefore the show cause notice and orders or subsequent appellate orders are liable to be set aside. So one should definitely ask each and every time in their written submission, what we used to do here, that in every personal in every our written submission, we add 2-3 lines below that, without giving us any opportunity of being heard personally in this matter, the order or the appeal could not be decided. We should be given, we seek an opportunity of personal hearing in this matter before deciding by the respected authorities. So this is something which one should really take care on a regular basis. Now thereafter comes the signing thing. We used to take this down very frequently in earlier VAT regime, because earlier also in VAT regime, the orders were received on the portal, specifically in the state of Rajasthan, Rajtax portal, we were receiving those orders, and in other states also, I'm sure that the orders were being received on the portal. However, those orders were always unsigned. So we were taking this down on a very frequent basis, and recently in the Bombay High Court also, this matter went before the court in Ramani Suchit Maluste, and it was categorically stated by the Bombay High Court, unless the signature is put on the order by the issuing authority, it will have no effect in the eyes of law. Therefore, the time of filing an appeal would begin from the date on which the signature of the issuing authority was put on such order. However, surprisingly, department has come with an press release kind of instruction kind of thing, where they have stated that since these orders are being issued from the GST portal, and that GST portal requires an assessing officer to log in, and from a specific key only he can log in, and therefore since this from his own login these orders were issued, therefore they are proper orders. I don't know how far this will go, but as far as the argument is concerned, this argument should definitely be taken, because unsigned orders does not have any value. So whenever I say that unsigned orders does not have any value, I specifically state that signing can be by digital signature or by hand signature. There is no issue about it, but it has to be signed on that particular date on which it was said to be issued. Otherwise, merely putting it up on portal without signing and stating that it must have been taken up by the specific authority from his login, because it can be done by his login only, is not enough. Because the courts view like this only, that the order should be signed. So this is a particular ground which we should check and definitely see. So I am taking all those technical grounds which are available for you in those particular show cause notices, that DRC01 has to be there. One should see and check the time limit. One should check the jurisdiction. One should check whether DRC01A was issued, DRC01 was issued, DRC07 was issued on the portal in the summary form in which it was sought to be given under the rules. One should see that the order is signed. One should see that opportunity of personal hearing is given. All those things should be taken up in a checklist in every such case where you are dealing with a particular show cause notice, because that checklist will ensure that you are checking all these potential arguments that you are having, because you never know that wherever in which court which argument will be in your favor and get you the case decided in your favor. So one should definitely check. Another part in this checking thing is DIN and SGST DIN. CGST authorities have been asked to mandatorily quote DIN number in every document that they issue. Recently, we found that in some cases, department has put the DIN, which was not on the portal. In the preliminary objection to that show cause notice, we specifically stated that since this DIN is issued, which is not there on the portal, therefore this show cause notice is incorrect and time barred, because it was issued on the last day. So the department came up with this particular thing that yes, DIN was issued for there were some 20-25 assessees for which the show cause notice was issued. So they stated that we issued DIN for only one assessee. For the rest of the assessee, we did not issue DIN. However, DIN number was put up incorrectly by the steno or by that other person who was looking after for dispatch. So we clearly stated that since in our show cause notice, whatever the DIN which was stated is not available on portal, therefore it can be clearly stated that DIN was not issued. And since DIN was not issued, therefore order in itself is incorrect. Show cause notice in itself is incorrect and therefore liable to be set aside. So these kind of grounds definitely help in pursuing your matter. Yes, the merit will always help. Merit has to be there, but these kind of technical grounds should also be there, which can take your matter to the merits very well. They will help you in specifically communicating your merits to the specific officer. Because once you are showing these kind of particular technical defects, then he has to very keenly listen to what your merits are. Then similarly, various state authorities have also asked their officers to put in, likely in case of Rajasthan, state authorities are, there is a circular which is in place where the state authorities are asked to put document identification number, DIN number on their respective documents. And in case of all the portal related documents, there is an ARN which is appearing acknowledgement reference number or document reference number which is appearing. So one should definitely check that they are proper. If they are not proper, then they should be taken as a ground, because in the Supreme Court, based on DIN, they have rejected a particular show cause notice. Now, let us come to specific issues. Recently, various kind of show cause notices which have been issued. So we'll take all these issues one by one. This particular case is of reopening of refunds which have already been granted after due scrutiny under section 54. Read with the rule 89 to 96. Based on various type of scrutinies which have happened, the refunds were originally granted by the respective jurisdictional or other authorities. Thereafter, some audit came, or some scrutiny happened, or some other thing happened, and based on that particular thing, it was identified that refunds were not properly taken, refunds were not issued properly by the respective authorities. Therefore, a show cause notice under section 73, 74, as the case may be, were issued. Now, in case of Ganesh Horse Private Limited, this matter was taken up before Odisha High Court, where the Odisha High Court has stated that since these show cause notices were issued properly, therefore one should definitely restrain from taking up such matters into the writ petition. Supreme Court rejected the SLP. However, while rejecting, they clearly stated that whatever the grounds on merits the assessee have, he can definitely take up before the authorities. Now, in Rajasthan, in various matters, the stays have been granted on this particular issue. Now, what is the issue behind it? The issue which was taken up before Rajasthan High Court, as well as in this Ganesh Horse case, is that once an elaborate proceedings happened by virtue of RFD 01, RFD 02, and a show cause notice issued in RFD 06, and thereafter a refund order has been granted in RFD 08. Therefore, these were elaborate proceedings where department conducted every kind of scrutiny which was in their command before granting such refund. Now, when the departmental authorities or respective proper officer having the jurisdiction over the assessee clearly checked all the things, clearly scrutinized everything in their refund. Now, based on clearly another apprehension by another similarly placed authority, such show cause notice could not have been issued, because the law contains certain provision in section 108 where the commissioner or the chief commissioner or the respective notified authority has been given power to review all the orders which have been granted or passed by the respective jurisdictional junior authorities or the proper officer. These remand powers have been given. So commissioner has a power, review power have been given. Commissioner in case of CGST have the power, and in most of the states, SGST commissioner also has the power to review all such cases. Now, bypassing such review process, another authority which is similarly placed, which is having similar or even in some cases lower authority, are issuing show cause notices to the assessee stating that whatever that particular proper officer or refund issuing authority has considered, scrutinized and identified, and based on that refund has been issued, has done incorrectly. This is incorrect. They cannot do so. So without resorting to the powers under section 108, no such refund can be reopened because those have been given after due scrutiny. Another ground which was taken, I'll take it later. However, for now, on this ground itself, under section 108, since this power was not invoked, on this ground itself, Rajasthan High Court had granted a stay in various cases, clearly stating that without review, there cannot be any reopening of refund. However, those matters are under final hearing now, but there is a stay as of now, and the stay vacations have already been quashed. Now, another ground which can be taken is when you read section 73 and 74, for 5 things show cause notices could be issued. Those 5 things are tax, short paid, not paid, or erroneously refunded, or input tax credit wrongly availed or utilized. So now, when we are seeing this whole scenario for tax, there can be three things: tax short paid, not paid, erroneously refunded. For input, there can only be two things: for input tax credit wrongly availed or utilized. For input, they have not returned the term input tax credit erroneously refunded. So when they have not used this term clearly, specifically this input tax credit erroneously refunded is not there. So therefore, under section 7374 for ITC refunds, there cannot be any show cause notice. This is another ground that has been taken before the Rajasthan High Court. Now, what is the background of this ground? That when there was earlier Senate credit rules in the excise regime, there was clearly a provision of tax short paid, not paid, erroneously refunded, or input tax credit wrongly availed and utilized, which was done thereafter, wrongly availed and utilized, and erroneously refunded. So this erroneously refunded term was already there in case of input tax credit or Senate credit under the earlier regime. However, this has been consciously been removed in the GST law. Now, once this has been consciously removed in GST law, therefore there cannot be any show cause for the at least input tax credit erroneously refunded in the GST regime. There can only be a review and thereafter an appeal by the department. They cannot issue show cause notices. And this comes further, this gets further strength when we see section 54. In section 54 also, there are two kinds of refunds which are granted without scrutiny, without proper scrutiny under RFD 06, like input tax credit scrutiny, or RFD 08 kind of order. There are two kinds. One is where earlier, when the GST regime was GSTR 1, 2, 3 was there, then based on GSTR 3, you can automatically take the refund of whatever the balance that is available in the electronic cash ledger. It was a provision, it is still there in the law. However, since that has been changed by virtue of GSTR 3B, 2A and all, this is not effective as of now. However, this provision was contemplated. And apart from that, there is another thing is that in case of export on payment of integrated tax, there is also without scrutiny refund is given based on certain verifications only at the customs portal. So even in those cases of refund, I feel that show cause notices can be issued. However, in case of ITC, because there is a scrutiny always, therefore section 73, 74 have been consciously taken out, that in case of input tax credit erroneously refunded, the show cause notice could not have been issued. So based on these two grounds, definitely one can argue, one can state that in such cases, wherever the show cause notices have been issued for input tax credit erroneously refunded are incorrect, they should have gone through the process of review, and since they should have gone through the process of review only, therefore such kind of show cause notices are incorrect, bad in law and illegal. So in all the cases wherever there are these show cause notices, one should take up these matters like this only. Now there is another kind of show cause notices which are going on in case of oil industry, vegetable oil industry. Because under chapter heading 15 and 27, by virtue of 18th of July 2022, the department has barred refund for the further periods. That is okay. For the further period, they cannot ask for the refund. However, what has happened specifically is they issued a circular. And in that circular, it has been stated that for all the refunds, even for the previous periods, for which the refund applications have been filed after 18th of July 2022, the refunds cannot be taken. So this is something where by virtue of a circular, department went ahead or violated specific provisions of that particular notification, because that notification clearly stated that for the period 18 July 2022, 18th of July 2022, for the period after that only the refunds are specifically barred. So for the previous period, the circular should be restricted, and since circulars are not binding upon the SSC, they are binding on the department only. One should take up these kind of matters, either to the appellate levels or to the courts, that these kind of show cause notices are incorrect, because circular goes beyond the provisions of the law and the notification, since the notification applies prospectively only. So wherever the refunds were eligible in case of these vegetable oil industry cases, the refunds must be granted for the periods prior to 18th of July 2022, and the circular should be quashed and set aside to this extent. So these all cases should be taken up like this. Wherever refunds are rejected, one should go ahead and say, this refund cannot be rejected because it is of a prior period previously to the 18th of July 2022. Now, let us go into various issues of ITC and tax liability, etc. Now, a number of searches have happened. A number of people have been arrested in fake ITC drives. Recently, I was reading in some paper that DGGI has stated that more than 2 lakh crores worth of GST scam were unearthed by DGGI and anti-evasion authorities during previous periods. This is huge. And however, when one goes deep into these show cause notices, it appears that in number of cases, these show cause notices are incorrect. In some cases, what is used to happen is that DGGI goes on search on a particular SSE. They find that SSE to be non-existent at its premises, either by virtue of a cancellation of registration, or by virtue of some suspension of registration, or by some other reason. They find that SSE non-existent. As soon as they find that SSE non-existent, they clearly say that whatever the input tax credit that were taken by the respective recipient of that SSE whose registration has been found to be non-existent, all those ITC are fake. They are received from a non-existent SSE. Therefore, they should pay the amount to the government. And there is another circular which has been issued in all such cases where multiple stage parties are involved at different levels, where there is one party who has issued certain invoices, paid the tax by virtue of fake credit. Thereafter, another SSU took such invoice, raised another invoice to another one, and there is a chain which is going on. In all such cases, they are directly contemplating to issue the show cause notice. Now, how one should go ahead in these show cause notices if the transactions are genuine? What happens is, in various cases, it is found over a period of time that in this entire chain, when this fake credit chain is going on, there is one SSE in between who has merely taken the invoices from somebody, taken the material from an unregistered dealer or some kacha entries in their books of accounts, mix up both of them, and thereafter issued genuine invoice along with material to some final consumer or to some another party. And thereafter, that particular party does the genuine business and they continue doing that business. So now, since your assessee is that party who has actually received the goods along with an invoice, maybe that invoice related tax was paid out of fake ITC, but you have received the genuine goods with you, then you should definitely go ahead and fight this particular case, clearly identifying certain things, certain documents which should be given as evidence. Now I'm listing out all those documents which one should have if they are doing genuine business. First of all, one should have an invoice, genuine invoice, along with e-way bill if that period, for that period e-way bill was required, because for financial year 17-18, mostly e-way bills were not there apart from some 15-20 commodities for which the e-way bill started from December 17 in certain states. However, in most of the cases, e-way bills were not there. It started from June 2018 in some states May 2018, and some states July 2018. There are different timelines for every state. So e-way bill should have been there. Then if the material was traveling in some transport vehicle like trucks, etc., then in all those cases, the consignment note from the transporter should be there. And if it is a commodity for which payment is done at the weighbridge, then one should definitely have the payment slip with them. And in most of the cases, we identified that every such assessee who receives such goods on truck or some transport vehicle, they maintain a register at their factory gate, which is said to be a factory in-out register, which is generally hand maintained. And thereafter, the stock details. One should definitely have the stock details. And in the last, if you know the transporter, you can definitely ask him to give you fast tag details of that particular truck, clearly delineating that that particular truck moved to respective tolls and thereafter reached to your premises. In If you are possessing all those documents, what you are doing actually is you are proving or you are discharging your burden of proof from the standpoint of input tax credit as per section 155. What is section 155? It clearly says that as per provisions of section 155, it is upon the assessee to prove that his input tax credit is genuine. So the burden of proof by virtue of law has been shifted to one who has been alienated. Otherwise, for the purpose of CPC, CRPC, it used to happen that it is first the burden of proof on the party who is putting allegations. However, in this case, the burden of proof lies with the assessee since he is taking the input tax credit. Therefore, the burden of proof lies upon him. Now, when you are having all those documents, what you are justifying is that I have taken the input tax credit. Since I have taken the input tax credit, I have all the documents available with me that the material has moved to me. Since the material has moved to me, therefore I have all those documents based on the things that the material has moved to me. I have used that material in my factory, or if I am a trader, I have further supplied that material to another party based on my stock register. I am definitely justifying that I have received the material, thereafter I have passed on that material to somebody else, or I have used in my manufacturing process in my factory. And since I have done all this, therefore my input tax credit cannot be denied. And this has been specifically said. So in number of judgments, in earlier, there are a number of judgments of Arise India line of cases, Arise India, Quest Merchandising, Delhi High Court, Arise India SLP rejected Supreme Court. In Rajasthan, RS Infra Engineering was there. Based on that, everybody was arguing, and in other states also, the number of judgments were there, which clearly suggested that if the supplier has not deposited the tax, a genuine assessee genuine assessee cannot be penalized for the actions of the supplier. It is for the government to identify such errant suppliers and raise certain demands or do whatever the enforcement activities upon such suppliers. However, recently another judgment of state of Karnataka versus Ecom Gill Coffee Trading Limited, Private Limited happened. That judgment was given by Honorable Mr. Justice M.R. Shah. And in that judgment, he categorically said that by merely proving that you are having invoice and you have made the payment, you cannot say that you have received the goods. You can always say that you have made the payment. Since you have made the payment, you must have received the goods. But it is since the burden of proof is upon the assessee, therefore, the assessee should prove categorically from the documents that the goods were actually traveling. Goods were actually traveled from one place to the specific place or the place of business or the factory of that registered person who is availing the input tax credit or who is said to be the recipient of the goods. Apart from that, he is to also justify by way of payment of freight charges, acknowledgement of taking delivery goods, or other such documents by which he can prove beyond doubt that such goods were actually received in his premises. So now this, because the situation is very rampant in case of metal scrap traders particularly. So what we suggested to these dealers after various cases which have happened by the DGGI, we suggested them to, since they were receiving genuine goods, but the parties who are the scrap dealers, because I'm talking about the smelters or other such person who are using that particular metal scrap, are big factories. So, but there are traders beneath the line, beneath the supply chain. So those traders were actually doing this particular thing, that they were receiving goods from one person, they were receiving invoice from certain person, mixing them and giving it to those big factories. So what we suggested them to take photos or to have a CCTV installed with a regular backup of that data, and based on that they take the photo of every such vehicle which has entered their premises, along with the copy of the invoice, driver's RC, vehicles RC, driver's license. Take a photograph, keep it with your invoice, and give it to the every authority that we have received these genuine goods because the vehicle actually reached my premises, along with other details which I have already explained, that you must have a consignment note, or you must have a I must clearly say that you must have a BILTI or other gate entry register or stock register or stock consumption register. Apart from these documents, you should take a photograph also. So since this is very rampant these days, that you don't know what your supplier is doing or what his supplier is doing, because you never know that in the entire supply chain which person has done such kind of things. So since you never know, you should keep all these documents, and based on these documents you should reply to those authorities, clearly contemplating and stating that in all such cases we have all these documents, material has been received to us, and since the material has been received to us, we cannot be penalized for our suppliers wrongdoings. So this is a clear-cut crux of Ecomgil coffee trading. One should have these documents. Though some people interpret this judgment to be in favor of the department, I interpret this judgment to be in favor of the assessee, because earlier we used to have so much of things that even after submitting all these document, departments say, okay, but the tax has not been deposited under section 16(2)(c), so therefore your ITC is ineligible. So now I'm saying that when the Supreme Court has given us this particular mandate, that if we supply these documents, then even under the VAT Act, because this judgment is related to KVAT Act, so they have clearly said that if you are justifying these documents, you are justifying that you have received the material, you are justifying that it was transported, you have made the payment to the transporter, in that case, you are a genuine recipient. And since you are a genuine recipient, therefore your ITC cannot be denied. This is the virtue of this verdict in particular. So in all such cases where you have a question over the movement of goods, you should clearly justify based on this judgment. You should ask for all the documents from the assessee, and based on all these documents, one should reply stating that my transactions are entirely genuine. Since my transactions are entirely genuine, I have received the goods, therefore ITC is true. Then in that case, 16(2)(c) will not play any role, because these kind of provisions were already there under VAT. Arise India is the offshoot of those particular judgments only, those particular provisions only. And thereafter, further judgments came in case of LGW Industries, Calcutta High Court, Suncraft, which has been SLP has been rejected by Supreme Court. Suncraft is already there, and there are a number of such judgments. DY Bethal, Kerala High Court. All those judgments clearly state that for the fault of the supplier, genuine recipient cannot be penalized. And once it is said a genuine recipient cannot be penalized, so it is your job only to prove that your transaction is genuine. And for proving your transaction to be genuine, you must have all of these documents, and based on all of these documents, you can definitely prove and state that your transaction was genuine. Now, this is another, what I could say is regular para under the GST audits. What they do is, this is a general accounting perspective or accounting thing by every accountant or a chartered accountant whenever they are auditing. So when the discount is received from the upstream companies who are supplying the material to the assessee, they book that discount in indirect income. And when they book a discount in indirect income, the department says that since this is an indirect income, therefore it is taxable because you must have done something for such supplier. Therefore, this amount has been given to you because you have augmented his sale. Therefore, you have done some extra service, and since you have done some extra service, these particular amounts are taxable under discount. So first of all, I would suggest everybody to change their practices of booking such discounts under indirect income act, because these practices are used to generally done for maintaining the GP ratios, etc. But for once, you have to change your tactics. What we have started doing is we have asked every client who is prone to receiving such discount, we have asked him to reduce these discounts from the purchase price, because these discounts are definitely received against the cost, are definitely received against the amount for which the earlier payments were done or the earlier invoices were received. Against those invoices only these discounts are received. They are somewhere somewhat related to the earlier purchases of the dealer. The upstream companies are not going to give discounts like this. They generally give turnover discounts or target achievement discounts or some kind of a scheme discounts they are giving. And these are mostly related to the sale price. So what we have clearly stated them to go ahead and change their accounting policies and reduce these discounts from the purchase price, so that actual value of the goods are also identified, and at the same point of time, these are not shown in the indirect income. So as to be prone for the audit officers to clearly identify that these are indirect income from on which the taxes have not been paid. Therefore, the tax may be demanded. So first thing first, this should be avoided. However, even if one has declared this in indirect income, so one should definitely show that these are not considerations against some supply. There is no supply of service which has been rendered to the upstream company, which can definitely be shown by showing them their contracts, their purchase orders, or other documents which have been received from the upstream company. We should show all those documents and clearly state that, look at our contract, these kind of discounts are already contemplated and these are given against the purchase only. They are not in the form of further services which we are given. The augmentation of supply is not for the purpose of that upstream company. That augmentation is for myself also, because I want to increase my sales also. As soon as I am increasing my sales, that upstream company sales automatically is increasing. So one should at every juncture, one should clearly state, clearly say that these discount incomes are not per se taxable. These are not incomes. They are basically reduction from my purchase price only. Only for the purpose of accounting, they have been declared under the head indirect incomes. This is one thing. Now, there is another thing which is happening in these days. The department is clearly saying that whenever you are receiving a discount, that discount is a subsidy, and since that subsidy is given, therefore it should be included in the value. So for upstream company, the department is saying that you are giving discount, you should include these particular amounts in value, and since you should include these amount in the value, therefore the tax should be paid. Now, this went to the Madras High Court, where it has been clearly stated by the Madras High Court that a discount offered by a distributor or supplier or the manufacturer to the buyer, recipient, simpliciter cannot form part of the transaction value. It can never form part of the transaction value, because transaction value is the one which is identified between the parties. The discounted price at which the assessee sells the goods is relevant for the purpose of determining transaction value. Nothing else can decide the transaction value, because for the purpose of section 15, the transaction value is ultimately the value at which the transaction has to happen. If the transaction has happened on the transaction value, transaction has identified and recorded in the transaction value, and there is no other thing which is interfering in that transaction value, then the department cannot ask to tax the discounts which are given. The tax has to be given, the tax has to be paid on the transaction value itself. So wherever the discounts are there, they should not be confused with subsidy. They should clearly be reduction from price. And whenever they are clearly reduction from price, only the section 15.3 related conditions have to be satisfied, which asks that invoice wise details has to be there. There has to be pre-agreement, and the recipient should reverse the input tax credit, for which already a circular is there, under which it has been asked from the assessees to take certificates from the respective recipients that they have reversed the ITC, or in certain cases more than 5 lakhs, wherever they have been asked to submit a CA certificate that such input tax credit have been reversed by the recipient. So these things are there. However, having said that, I'm clearly suggesting that these cannot be included in the transaction value. Now, that is a big thing, this land value thing. Though we all have accepted one-third valuation of land in case of construction contracts, had another view, and which is a very clear, very prudent view that the Gujarat High Court has taken. This is Munjal Manishbhai Bhatt judgment, very famous judgment as of now in the circles of real estate industry. Because what has happened is there are a lot of change which have been made by the government in real estate sector. Earlier, the tax rate was kept as high as 18%, 12% for affordable houses. Then number of conditions were there. Then thereafter, from 1st of April 2019, it was thought that taxes are running high. The whatever the registered person or taxpayers who are into the real estate industry are not passing on the benefit of input tax credit to the home buyers. They are charging 18% extra from them in the name of GST. So they changed the entire regime. They made it a non-ITC regime where they have to pay tax upfront. They have reduced the tax rate, and number of things have been added in this whole scenario. But there is one thing which was constant earlier and as of now, is that whenever a particular property is sold along with an undivided share of land, or property is sold with the land, rights of the lands have also been transferred, then in all those cases, the department in itself has stated that we will take the value of the land as one-third value, which is prudent in some cases and not prudent in certain other cases. Like the big cities, the value of land is so much that it can never form one-third of the value of the entire cost, because value of land is very high. However, in some cases, in some other smaller portions of the country, there the value of land is low, however, the construction cost is more. But they have identified this formula that one-third value of the land should be taken to be the transaction value for the purpose of construction services transactions. Now, when it has been identified and notified by virtue of notification 11/2017, the matter reached to the Gujarat High Court. Now, Gujarat High Court looked at section 15. And based on section 15, Gujarat High Court has stated that the legislature in itself has asked to pay tax based on the transaction value only. And when the legislature has clearly asked to pay the tax on the transaction value, the department does not get the right to identify or to declare a transaction value wherever there is a manner of determining that transaction value. That means that transaction value can be changed by the department only when, by virtue of Rule 27 to 31, there is no possibility to identify the transaction value. So once the transaction value can be clearly identified by the agreement between the parties, where the parties have agreed in their agreement that this much is the value of the land and this much is the value of the construction services, once they have identified this, by virtue of a notification, they cannot say that the transaction value is identified by the government, by the executives in a notification, that this particular transaction value will be taken. So now once this is done, therefore this particular portion of the notification is incorrect, and therefore the transaction value actually identified by virtue of an agreement is identified to be yes. So whenever you are finding that your value of land is more than one-third or more than half or more than that even, then you can definitely approach the courts clearly asking to quash this particular explanation to notification 11/2017, stating that this is an encroachment on the power of the legislature. They have taken themselves into the shoes of the legislature, and therefore this notification, this valuation should be set aside, and SSE must be allowed to take the valuation as per the transaction between the parties, as per the agreement between the parties. So this is very good judgment where they have actually identified which powers the legislatures have, which power the executives have, and based on what particular provision the executive can decide the valuation. And if in a particular sense they do not have such power, therefore this particular explanation of the notification was set aside. Then this is one of the various lines of input tax rate related judgments. Earlier in Eicher Motors, Daiichi Karkaria, these line of judgment, we used to say that input tax credit is an indefeasible right, and since it is an indefeasible right, therefore the assessee can definitely say that since I have paid the tax to the supplier, so I must be given the input tax credit benefit. One cannot take away the benefit from me because it is an indefeasible statutory right which was available to me. However, thereafter, a number of judgments which have happened in case of Mohit Minerals, even before that Jayam and Company has happened, where the courts have decided that in all those cases, wherever the input tax credit have been availed, is clearly a right given under the statute. Yes, however, that right is subject to certain fetters. When that right is subject to certain fetters, then the department has the right to ask for those conditions to be fulfilled. And in case those conditions are fulfilled, then only the assessee gets the right to avail the input tax credit. So it is merely a concession. And since it is merely a concession, therefore input tax credit uh, cannot be input tax credit can be denied if the conditions are not fulfilled. So there are various such judgments happen. Now, in case of this Mohit Minerals case, what has happened is that petitioner asks that whatever the clean energy says that he has paid up to 30th of June 2017, he must be given credit to the extent of payment so made. So, because earlier there was a scheme where the set-off was available to him against that clean energy cess. So thereafter, compensation to state act has happened, and there were rules framed thereunder to give set-off. So it was allowed for the petitioner to give the set-off of so much of the amount of compensation cess for whatever the clean energy cess of the coal he has paid. So it was accepted. However, again in this it is specifically decided that ITC is a mere concession. It is not a right of the assessee. Now again, input tax credit issue, suppliers non-compliance. We have already discussed that in Suncraft, it has been stated by the Calcutta High Court that the authorities cannot deny ITC solely based on non-reflection of invoices in the supplier's GSTR 2A. They must consider that whether the recipient has fulfilled all its obligation, and if there is any evidence of fraud or collusion between the buyer and the seller, then only they should deny the ITC. If there is no collusion between the two parties, then the ITC cannot be denied. It is definitely a very good judgment followed by the Supreme Court because Supreme Court did not interfere in this judgment. So again, it is a good judgment. DY Beetle, same line of judgment. Astha Enterprises, they are on the same line. Now there comes another saga, that is section 16(4). Now everybody is very happy these days as far as section 16(4) is concerned, because for the period up to 2021, everybody has been given time till 30th of November 2021 to claim their input tax credit, stating that there is another provision which is there, section 16(5). And based on that section 16(5), all the because already the notification is there for the procedure and circulars are also there that how one should go ahead in such matters to get their matters out of hand wherever the recoveries have not been made, because government categorically stated that we will not be giving any kind of refunds to the assessee in such cases. Now, there is one particular thing which I would like everybody to see in these cases. Though for the period till 2021, these matters are over, but this provision is still there, and government, in case of safari retreats case, has upheld the validity of Section 16, because Section 16(4) was challenged in safari retreat before the Supreme Court, and the Supreme Court has upheld the validity. Now, for the further periods, what is going to be the fate of Section 16(4)? Because in Section 16(4) case, it is clearly identified only that uh, a particular time limit has been given for availing the ITC. If you are not availing the ITC in that time limit, then because there is no time limit which has been given, then in such cases, because there is a time limit which has been given, so whatever the ITC that one is availing after that time period is said to be time barred, and based on that, input tax credit is disallowed. Now, there are two kinds of cases. One is, I have filed my return, I have forgot to take certain invoices in that return, and thereafter my in my return of November or December or somewhere in any return after 30th of November, I have taken that ITC in that particular month's return. And there are another type of cases where I have not filed my return. I have even not filed my return for the month of, let us say, February and March, and because of certain fund crises or whatever that is, and I have filed that return after 30th of November. Now, what will the fate of those two cases need to be seen, because this is going to be there in future also, that assessees are having financial crunch or for some other reason or for some crisis in their lives, they are not able to file their returns. These things will be there. So what will happen in those cases? What will happen in those cases where the assessee does not file its return? Whether his ITC will be denied. So these matters are still under challenge. This 16(4) is still under challenge, where in Rajasthan High Court also it is under challenge, and in other high courts also it is under challenge, that 16(4) should be read down. How this should be read down, we should understand. Now, everybody remembers interest fight. There was a GST Council discussion that interest should be charged on the balance available in, should not be charged for the balance available in credit ledger. It is only should be charged on the amount which is paid by way of cash ledger, otherwise the interest should not be paid. This was discussed in a GST Council meeting. When this was discussed in the GST Council meeting, it was put forth before the GST Council that as per Section 39, the assessee has an option to file an invalid return. Now, what is meant by an invalid return and what is meant by a valid return? There's a definition of valid return which says that whenever the assessee files the return along with the entire payment of tax which is required to be made under the law, that is called a valid return. When the assessee files its return without depositing the entire tax, or some certain part of tax is not paid, then in that case, an invalid return would be meant. It would be treated as an invalid return. Invalid return means that the assessee would not be said to be entitled for certain benefits, or his recipient would not be entitled to take the ITC, etc. Now, when this was discussed, this particular thing was discussed, that assessee had the right to file an invalid return. However, since we have not given him the benefit of filing that invalid return on the portal, because what happens is you go to the portal and you say, okay, I will take deposit the tax only towards the ITC, rest the amount of tax will be deposited at a later point of time, the return won't be filed. So if you have a liability of 100 rupees and you want the same to be paid by way of using your electronic credit ledger, it will not be allowed. Portal will not allow you. So it was discussed that since the portal is not allowing to file an invalid return, so therefore the law should be changed, because otherwise we are asking the assessee to pay the interest on the input tax credit as well, which is in his possession. The invoices are in his possession, but since he does not have the amount of tax with him, or due to any financial crunch, he cannot pay that particular tax amount right now. Therefore, we are penalizing him for the entire amount of tax liability. So therefore, this provision should be amended. Now, let us take this discussion in the light of section 16(4). Now, what is similarly happening is that whenever an assessee has some financial crunch or for some other reason, he is not able to file his return, but he has that input tax credit, he has those invoices which are in his possession. But since he does not have the amount to pay the tax, amount to pay the balance tax in his cash ledger, therefore he is not able to file his return. And since he is not able to file his return is delayed beyond the point of 30th of November. Now, this scenario has been created by the GST portal. This scenario is not contemplated in the law. And this has been discussed in a GST Council meeting. And GST Council has taken this particular view that since this is a particular problem, therefore we are amending the law in terms of section 50 subsection 1 and the rules that rule 88B is there for that. Now, taking this to section 16(4), one can clearly identify that even in case of financial crunch, the portal is not allowing me to file. Otherwise, I would have filed my return, taking that ITC which is in my hand, pay the tax till the amount of that ITC, remaining amount I could have paid in cash, and therefore my input tax credit could have been availed and utilized in that return, subject to my final payment of tax. Yes, till the time I don't pay my final tax, my input tax credit cannot be said to be finally eligible. But if I pay the tax amount finally, then my input tax credit is valid, genuine, and therefore, based on that, I could have complied with section 16(4). So the section 16(4) should be read down in such a manner that wherever the assessee has filed the return after the due date of filed the return after the 30th November, then in that case the ITC should be allowed. However, if the assessee has forgot to take the ITC in that month's return and thereafter that credit is taken in another month's return, definitely section 16(4) could apply. So this is a particular argument which is there available in case of section 16(4)'s interpretation, and for the benefit of the assessee, for asking the courts to read down to this extent that wherever the returns could not be filed within time, the returns in itself was not filed, the 16(4) embargo should not be applied. Now, apart from that, another argument which is being taken on a very regular basis, however, in case of safari retreat judgment, the Supreme Court has not put a very in-depth view on this. They have kept this open. Is there are two things. One is availment and one is taking. As per section 16(1), whenever you read section 16(1), whenever you read section 4139, there are different words which have been written. 16(1) clearly states that input tax credit shall be eligible to be taken. And whenever we read 3941, it asks for availment. So there are two different things. Taken is meant to take input tax credit in the books of accounts. It used to be there in case of earlier excise law as well. Whenever there was a provision of SENVAT credit, it used to be there. We used to say in particular that I had taken this input tax credit or SENVAT credit in my books of accounts. Since I have taken this input tax credit and SENVAT credit in my books of accounts, therefore it is eligible. And since I have only forgot to take it in return, so therefore I may be allowed to take this input tax credit now. Apart from that, the same view can be taken in GST as well. If I can elaborate, if I can show from my books of accounts that that particular invoice was taken or that particular input tax credit was taken in the time in my books of accounts. However, somewhat for some reason, I have not taken that input tax credit in my GSTR 3B which I have filed. Therefore, I may be allowed to take that input tax credit or avail that input tax credit at a later point of time, because under section 16(4), what is barred is taking the credit, not availing the credit. So this is another view which has been taken. However, in 16(4) case, all the cases which have happened in most of the courts, courts have upheld the validity, except the one in case of, I think it was Madras High Court, where it has been held by the Madras High Court that 16(4) is invalid and therefore that benefit should be given. So this is the fate of 16(4). I think this was Kavin HP. In this matter, it was stated that similar issues were pending, and based on that, they have stated that the benefit should be allowed even after the time limit. And later on, this particular view only the government came up with these views. And moreover, when you read Bharti Airtel, another Supreme Court decision on the input tax credit itself, the Supreme Court in Bharti Airtel reversing the benefit given by the Delhi High Court has stated certain things. Supreme Court in Bharti Airtel has clearly stated that GST is a self-assessment regime. You need to take input tax credit based on your books of accounts. And when you are taking the input tax credit based on your books of accounts, your credit is valid because you are not required to rely upon GSTR 2A. However, later section 16(2) AA and BA have been notified and they are under the law. However, in the Bharti Airtel in 2021, government itself has, Supreme Court itself has stated that wherever there are input tax credit as per your books of accounts, you need to take those input tax credit as per your books of accounts only. And when you state that you have to take credit as per your books of accounts only, therefore, one should clearly say that I have taken the input tax credit as per my books of accounts, and now since I am availing at a later point of time in my return, therefore my credit is eligible. So one should clearly maintain this virtue. Now there are some other issues. Loss of goods, section 17(5), goods lost is stolen, destroyed, disposed of as gift or free samples, the credits are denied. The matter went to the ARS Steel's Madras High Court. There were two things. One was that there is a normal loss in the production process, and there was an actual loss or some destruction at the floor or some other place of the factory or some other premise where the destruction of the goods happened. Now, whether the normal loss should also be disallowed, because ultimately the terms which have been written, goods lost, stolen, destroyed, disposed of as gift of free sample. So whether those normal loss should be allowed, because a number of show cause notices have been issued in various factories where normal loss, which they have booked in their quantitative tally as per income tax, or in their stock records which have been maintained and certified by the statutory auditors, the show cause notices have been issued for reversal of the ITC on such normal loss which have been booked. And it is a regular feature of number of industries that the normal losses occur. When those normal losses occur, it happens on a very frequent basis. Because every industry has certain loss which is used to happen. So the courts have clearly stated that normal loss has to be taken apart from the terms which have been written in section 17(5)(h). They cannot be equated with any of the instances which have been set out in that particular section. All the particular provisions, all the particular things which have been given under section 17(5)(h) are in relation to goods which have been lost, which have been destroyed, which have been written off. As such, in the books of accounts, they are abnormal losses. They are goods which have been which could not be used. Whereas in case of normal loss, the goods which are under usage, which are under process, only certain portion is either evaporated or either left to no use or either turned into scrap. Thus, such kind of normal losses are allowed and for which the ITC is not required to be reversed. Now the big saga, safari retreat. This is a very particular case which has happened over a period of time. It started from Odisha High Court. The issue before Odisha High Court was that whether the benefit under input tax credit is required to be given for the purpose of those immovable properties which are intended to be let out after their completion. The issue went to the Odisha High Court, and Odisha High Court has categorically tried to evaluate the provision under Section 17(5)(c) and 17(5)(d), specifically Section 17(5)(d), where the input tax credit is denied for the goods or services which are used in construction of immovable property. Since those goods or services which are used in construction of immovable property are in particularly it has been stated in 17(5)(d) that the goods or services which are used in the construction of immovable property on his own account are denied. So the Odisha High Court went on to interpret the term on his own account. What is meant by the term on his own account? And Odisha High Court, interpreting the term on his own account, has read down the provision and stated that this on his own account has to be meant to be used by the assessee for himself after completion. If the assessee's intention is to let out those properties, is to let out the completed property to other people, then it is interpreted, or it is concluded, it was concluded by them that then it cannot be said to be used for his own account. Then it is for the purpose of rental, it is for the use by others, and therefore the input tax credit should be eligible. Now, since the Odisha High Court, there was discussions at length in the industry as well as various other places, that whether now an assessee can take the benefit of such ITC in case of hotels, warehouses, malls, where the developer intends to let out the properties, not sell the properties. Because in case of selling the property, ITC was eligible at initial period of time. However, now also in case of commercial properties, the input tax credit is eligible, subject to whatever the payment of tax is being done or whatever the properties are booked before the completion. So this particular thing was discussed in Supreme Court. Now, what Supreme Court interpreted? Supreme Court went at length into two things, two terms which are separately written at two separate places. First, a term is written in Section 17(5)(d), plant or machinery. So it is written like this, that input tax credit shall not be available in case of goods or services which are used in construction of immovable property on his own account, except plant or machinery. The term is used as such is plant or machinery under Section 17(5)(d). Now, there is an explanation below Section 17, that is, what is the meaning of term plant and machinery? Not plant or machinery, it is written plant and machinery. And there they have explained that the plant and machinery are these things, equipment, apparatus, etc., and excluding themselves from any kind of civil construction, etc., or buildings or things have been removed. So the department tried to interpret and stated that since this plant and machinery has been defined or identified by us, so this building cannot come into the definition of plant and machinery, and therefore the input tax credit cannot be made eligible. However, Supreme Court stated that when the legislature categorically used plant or machinery only once in the entire law, whereas plant and machinery has been used some 7, 8, 10 times in the law, then this has to be given its specific meaning, that the term plant or machinery has to be interpreted separately, as if the definition of plant or machinery has not been given in the law. Now, for that, they referred plant or machinery to certain previous judgments of Supreme Court itself, given in various income tax cases and other cases. And based on their interpretation in those cases, the Supreme Court stated that the buildings can also be treated as plant. However, owing to some earlier judgments of hotels and cinema theatre, specifically Anand Theatre judgment was there, they concluded that we are not inclined to go into the earlier decisions and we will maintain that hotels and cinema theaters are not planned, whereas warehouses and malls, whether they are planned or not, is there for the department or for the High Court of Odisha to check in case of safari retreat, and they rendered the matter back, stating that yes, building can be a plant, yes, building can be interpreted to be a plant, and therefore it will come into the exception clause of exception part of section 17(5)(d), and therefore if the building is said to be a plant, the credit will be said to be eligible. And if the Odisha High Court, when they rendered the matter back, they stated that if the Odisha High Court understands the mall to be a plant, then in those cases, the input tax credit shall be definitely deemed to be eligible. So what this judgment has done, this judgment has opened a Pandora box for everybody now. Now, every such assessee who is a warehouse owner or who is a what can I say, mall owner, which is intended to be given on rent, they can definitely take the benefit of this judgment. They can say that since the judgment has categorically stated buildings to be a plant, therefore our warehouse and our mall is a plant per se, therefore comes under the exception clause to section 17(5)(d). However, for all those cases which are under hotels and cinema theaters, the assessees should definitely go again to the Supreme Court, asking for a review of their decision, stating that cinema theaters and hotels were specifically excluded based on an income tax ruling, where it has been stated that for the purpose of additional depreciation, we cannot say that the cinema theater is a plant and machinery, and therefore we cannot say that for the purpose of depreciation an additional benefit should be given. Therefore, we are not treating this as a plant. Based on that decision, Supreme Court said that since it is a larger bench decision, we are not keen to interfere in that decision. However, they should ask for a review and then say that for the purpose of GST law, this plant and cinema theater is equivalent or at par with the buildings which are warehouses and uh, uh, commercial malls, and they are akin to plant. And since they are akin to plant, the Supreme Court should review their decision and include all such buildings, including hotels and theaters, which are akin to plant, to specifically state that input tax credit should be made eligible. So this is what one should do in case of safari trade case. However, as of now, all the warehouse owners and all the assessees who are owning the malls where they are intending to give those properties on rent, or they have individual shops where they want to give them on rent, in all such cases, they can take or avail the benefit of the input tax credit. So this is what the safari retreat is all about. I would like to talk about one other judgment also of Supreme Court only in case of royalty, because a number of show cause notices have been issued. A number of such show cause notices have been adjudicated. The matters are at the stage of adjudication in some cases, appellate in some cases. In some cases, even the appeals have been rejected. Now, this was a contentious point since Udaipur Chamber of Commerce judgment was there in the year 2017, where the Rajasthan High Court has upheld the royalty to be a taxable thing, and they have stated that royalty is not a tax, and therefore further tax could be levied. It is a consideration. And based on that, service tax should be levied on the all the assessees on the amount of royalty which they have paid to the government under reverse charge. This was with effect from 2016-17 and 17-18 for the purpose of service tax, because before that they themselves had an exemption entry based on which such mineral rights were not taxable. Then thereafter GST came and there was a roller coaster ride in GST. Lakhvinder Singh case was first stayed by the Supreme Court. Thereafter, Supreme Court rendered the matter back to the High Court, asking for them to take this matter under Article 226 rather than going directly under Article 32 of the Constitution. The moot point in every writ petition before the court was that whether royalty is a tax or not. And behind that, the ground which was there, the reason which was there were two contradictory judgments of Supreme Court, one 7-judge bench, one 5-judge bench. One was interpreted to be in favor of assessee, while the other 5-judge bench decision stated that whatever is said in 7-judge bench decision is incorrectly written there, therefore it should be interpreted in this way. So the 7-judge bench, which is India Cement, it was used by us, stating that in India Cement it has been categorically stated that royalty is a tax, therefore there cannot be any further tax levied on that. Thereafter, another judgment of Kesoram Industries versus State of Bihar, which was there, in which it has been stated by the Supreme Court that it was a 5-judge bench decision. It has been stated that earlier decision of the India Cement was incorrect, and therefore the correct view is that royalty is not a tax. Thereafter, the matter went to Mineral Area Development Authority's case, 9-judge bench, and it was pending in 2010, pending to be adjudicated and finalized. Now, recently that judgment was rendered, and with the 8-1 majority, Supreme Court stated that royalty is not a tax. So, from the first reading, it was like this, that yes, okay, now since royalty is not a tax, further taxes could be levied. However, Supreme Court interpreted this in many ways, and in those many ways, one can see that now royalty cannot be taxed either under Service Tax and under GST, and I would explain the reason for those things. First is that Supreme Court interpreted what is a mineral right. They have said that all the rights which an assessee has in terms of exploration, prospecting, taking the mineral out, selling it, everything comes under the umbrella of mineral rights. And royalty is a consideration against those mineral rights which is paid to the state government. So again, that goes against the view that, okay, royalty is a consideration, it is not a tax. However, thereafter, Supreme Court interpreted that who has authority to levy the tax on such royalty or on such mineral rights. So they've identified that entry 50 of the state list gives the exclusive power to the states to levy tax on such consideration in terms of royalty, or to levy such tax on the mineral rights. And since the states have the exclusive domains, state have the exclusive power, central government only has a regulatory power based on which the MMDR Act has been passed by the Parliament. They only have the regulatory power over the amount of royalty or over the development of the minerals in a particular area. They can, yes, decide the amount of royalty, they can put a check on the amount of royalty, but they cannot tax it. So once it has been stated that it is under the exclusive domain, exclusive right of the states, one can clearly identify that since it is under the exclusive domain of the states, the service tax, which is specifically levied under entry 97 of the center's list, this cannot be levied by the center or by the Parliament. They do not have any right. They do not have any right by which they can levy service tax. Then this comes to GST. Now again the question is, the right is exclusively with the state government. So if I can say yes, the GST can be levied, but can the CGST be levied? No, CGST cannot be levied. Now one need to look at this point of time to Article 246A. Now, what is Article 246A? Article 246A of the Constitution is an enabling provision of the GST by virtue of which the GST is brought, which is an enabling provision which clearly says that the center and the state have the simultaneous power to levy a particular tax. That means once an SGST is levied, the CGST is automatically levied, or CGST is levied, then SGST is automatically levied. then wherever the states would want to levy a particular tax, then CGST has to be levied simultaneously. That means if the states have exclusive power on a particular domain or a particular thing, then in that case, GST cannot be levied because CGST does not have, or the central government does not have the power to levy that particular tax. Therefore, the GST will also go down. This matter is lying before Supreme Court in Udaipur Chamber of Commerce, and a hearing has already happened. And that also, the Supreme Court had a particular view that yes, for this already a decision has been made that royalty is a tax, is not a tax, a consideration. But at the very same point of time, this is under the exclusive domain of states. So, royalty, service tax, and GST on royalty should get out, should go on, should not be taken up. So this might be, though this is in future, whenever this happens, this will be decided. However, this seems to be the view as of now. So in all those cases where you are fighting a matter against royalty, you are fighting a matter against GST and on royalty under reverse charge, one should definitely put up this particular argument that since as per Mineral Area Development Authority's decision, this thing has been clearly been put up. This thing has been put up under the state list, an exclusive domain, exclusive right of the state. Therefore, there cannot be any kind of levy of tax on such amount if this is going to be like this. So this is what the royalty is all about. Now, interest deposit in cash ledger. This is very interesting thing. However, now Rule 88B is there. It has clearly stated that only the amount of cash from which the tax has been paid, only on that amount the interest shall be levied. However, earlier we used to fight on these matters in this particular section. Now, there is another judgment or another issue which was taken up by the states for which a number of show cause notices have been issued, stating that in various cases, what happens is that there are number of inputs which are used. The main input for a particular commodity to be manufactured, for which a particular commodity raw material is used, that is under the same rate. So, for example, we are talking about oil industry. So, what happens in oil industry is the mustard comes or is purchased at the GST rate of 5%, and at the same point of time, the edible oil goes out or is sold at the GST rate of 5% only. However, in a plant, in a oil mill, a number of inputs are used, a number of spare parts for machinery are used, other chemicals are used for based on which the refining process is done, and thereafter packing material, which is the can or some packing polythene, etc., which are used, everything comes at the GST rate of 18%. So it is argued by department that since more than 80% of the goods or 90% of the goods, the tax rate is 5%, therefore this cannot be said to be under the inverted duty structure, and since it is not an inverted duty structure, the input tax credit cannot be refunded. Now, this matter went on to the Rajasthan High Court. Rajasthan High Court categorically viewed this, and based on their view of various circulars, notifications, it has been identified by the Rajasthan High Court that the term which is used is inputs, not the input. When the term inputs is used, that means when even a single input is having a rate more than 18%, more than the rate of tax of output liability on the end product, then in that case, the inverted duty refund is eligible. Where the rate of tax on input is higher than the rate of tax on output supplies, the scheme of refund is required to be given full effect and cannot be denied. On such consideration, the rate of tax on comparative analysis is more or less the same. Rajasthan High Court in this particular case has categorically identified that everybody need to check that whether even a single input creates an inverted duty structure. If even if that forms a very low value of the entire input tax credit bunch which is there, even if that forms a very low part, then also the benefit under inverted duty structure cannot be denied. One cannot say that in input or output are at the same rate. One has to see what all the other inputs are there, because department was clearly going on a narrower view, stating that since mustard is only the input, rest all are the spare parts. However, reading the definition of the inputs in section 2, the courts have clearly understood that all the things which are not capitalized are definitely inputs. All the things which are used in the business and are not capitalized are inputs. And since all the things are inputs, therefore, one cannot say that this particular goods does not go into the inverted duty structure scenario, or this does not go into the realm of inverted duty structure. Therefore, even if a single input has a tax rate of more than the tax rate of output liability, then in that case, GST refund is to be eligible. In this particular case, there were multiple inputs and multiple outputs also, because in this particular case, what was there was that there was a particular byproduct. On that byproduct also, the rate of tax were higher. The rate of tax were 18%. So the court also interpreted in this term that even in case of multiple inputs and multiple outputs, even for once if the SEC can substantiate that a higher rate of input was used for a lower rate of output, then in those cases also the inverted duty refund is eligible to the assessee. So Rajasthan High Court in very clear terms have identified that uh, uh, this should be done in this fashion. So I have discussed these case laws in a manner to allow you to reply to various show cause notices, various strategies that you must form, various arguments that you must take. Now, apart from that, there is only one case which I would like to add here and give it as a suggestion or an advice to everybody is to form a checklist. Whenever you are receiving a show cause notice, please prepare a checklist at your end. Take various different type of arguments which are there available for you, and based on those arguments, please put up your respective views and put up your respective grounds which are available to you. Once you are able to do this, then definitely your show cause notice will be having a fulfilling reply, or a reply which the department could not deny, because there are a number of such things, a number of arguments which you can take. Like in case of seizure that I have earlier stated, in case of confiscation, in case of seizure, there are customs judgments available which state that once goods are provisionally released, then thereafter they cannot be confiscated because they are not in the possession of the assessee himself. Therefore, once the goods have vanished, there cannot be no confiscation. So these type of arguments are there which can be taken on case to case basis. Based on that checklist, you will be able to identify that what are the different issues which are there, what are the different grounds which I could take, what are the different case laws which are available. So one need a comprehensive look, and that can only be done when a checklist is made, when a different type of grounds are identified in that checklist, and then thereafter it can be implemented. So I think my time is almost over. I have taken most of the different kind of notices which are there. So I think it's time for me now. Praveen sir.
Sir, thank you.
Thank you so much, sir.
Thank you, Mr. Ranjan Mehta, sir, for your outstanding presentation. We have received some questions, some query. Could you see that? Or I explain them?
I can't see queries here. Okay.
Yeah. One query is from the Hassan Khalid. Hello, sir. Could you please explain what did you mean by Supreme Court reviewing their decision with respect to the additional depreciation under Income Tax Act?
Basically, this decision is which has been rendered by lower majority bench. So one can definitely go on and say that since for the purpose of GST, if a warehouse has been understood to be a plant, then definitely a hotel can also be understood to be a plant, and a cinema theater can also understood to be a plant. So definitely, as a body as a whole, hotel bodies then themselves should go on and ask the Supreme Court to review their decision, because what they have done is based on that income tax judgment, wherein it was stated for the purpose of additional depreciation. That judgment was for the purpose of that whether additional depreciation benefit should be given to a hotel or not, or a cinema theater or not. And there they have decided, okay, this is not a plant, so we are not going to give you this benefit. However, from the perspective of GST, you should ask specifically that this is something for the purpose of GST, so one should again review their decision which they have given in terms of income tax. So now this GST decision should be reviewed and it should include hotels and cinema theaters also. So a review
Yes,
should
sir.
be filed.
One question is from Ajay Garg. In case our SSC has returned material through tax invoice, but the supplier has issued credit note. Now the officer has levied the tax, but actually no loss to department. How it justified?
There lies a big problem actually. When you have written the material on an invoice and he has issued a credit note. So what has happened? You have charged tax, he has not taken input tax credit, and he has raised credit note, and you have not reversed ITC on that. So both of you, one has not taken ITC and one has not reversed ITC. So as far as I understand is, you should definitely say in your reply that it was my decision because I was a supplier. Since I was a supplier, so I have raised an invoice. He should have taken the credit. He has not taken the credit, and his credit note is not binding upon me because his credit note does not serve any value to me. I have received the material and I have taken the input tax credit and I have supplied the material back, and therefore I have charged tax on that. So since I have paid the tax, therefore my credit is eligible. Now, as far as the credit note is concerned, I am not required to reverse the tax on that credit note because I have received those goods properly. So I think this should be a reply. However, that revenue neutral scenario you can definitely explain, but lower authorities won't listen. It would be heard by tribunal or something.
Okay, sir. Thank you, sir.
Thank you so
you,
much.
Advocate Ranjan Mehta, sir, for sharing your valuable insights with us today. We appreciate your expertise and thoughtful presentation. I also thank to CMP of ICAI that he has given such a wonderful opportunity to me. We appreciate your participation. Thank you and goodbye.
Thank you, sir. Thank you so much.
Thank you, sir.